Good morning, traders. This is Michael coming to you from GammaEdge on April 3rd, Thursday, April 3rd, 2025, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model. This is obviously based on the tick index. If you've been following us for any amount of time, basically in a short term, this is buying versus selling via market participants, and then we add a time component to it to be able to look at the trend of the overall market. As you can see, for the past 2 days, we have seen a recovery. Our bolded CT is our instantaneous intraday CT. Again, this is the market participants buying versus selling and who is winning the battle. We did see a 2-day recovery, but again, we re-entered that ribbon, which is our longer term look. The red continues below cyan. So on a simplicity, this is still a bearish state. With the bolded CT recovering into the ribbon, this is usually an area where we see some stalling or failure if we're going to maintain a bearish overall look within the market. And obviously, if you've looked at anything this morning, pre-market, we're gapping down pretty significantly. We did see a recovery in price yesterday. We did see some filtered cumulative tick recovery. This would be institution buying versus selling, plus 1,000, minus 1,000. But we did not see a recovery in the overall market breadth, which was new lows outpacing new highs still pretty significantly. And as you've seen really the past 4 to 5 days here in this overall structure, we continue to see the new lows outpace new highs market breadth. In simplicity form, that just means more stocks are being sold than being bought. So with the short-term recovery, we did see some recovery within our market trend model, but within the overall 30,000 foot view, it still remained in a significantly bearish state. And once we continue to live under this colored ribbon with the bolded CT as well as the moving averages, we do remain very cautious, and we call this prone to failure. And obviously this morning we're seeing some sort of failure with price action. So we'll watch the resulting cumulative tick and see if this continues, that sellers maintain control of the overall market or take back control on the short term, as well as the longer term overall market trend and structure. Moving on to the SPXA, we do remain put dominated as shown here. The SPXA is basically just a measure of the monthly and quarterly expiries. This is institutional positioning. We separate the SPXA and the SPXP. When combined, obviously that produces the SPX complex. As we've been talking about for multiple days with the true zero history here, we did not see a significant recovery in the true zero. Obviously, this would be indicating that market participants call speculation is coming back in and we're crossing above the zero lines, but we did not see that recovery with the resultant price appreciation. We've noted the SPXA where the significant higher sensitivity levels are. Obviously, gamma here, 5,400. In the left-hand plane, this is obviously below spot price, so we're watching these areas for possible price reaction, and then 5,500 to the upside is going to be an important level to move through. And then obviously on the net delta, we know these are extremely wide here, but we've forced a spot price. So basically what we're saying is these are institutions are still positioned in a put-dominated state. They're speculating to the downside, and our implied open is going to be significantly down via the option structure, capturing all of this negative delta and forcing any of those in-the-money calls or calls that were close to being in the money out of the money. So again, adding more negative delta and being below all of this options structure is not conducive of spot price appreciation, at least in a short term. We could see a short-term recovery, but a longer-term move up is going to take a very significant time to repair the overall option structure within this put-dominated negative gamma complex. Moving on to the SPXP. Again, you notice that we are put dominated. We have blurred out the negative delta or net delta net gex as our implied open is significantly below all of the areas in the structure. A feature we here have at GammaEdge is pre-market. We can force our spot price at certain levels, and this is give us an overall look of the option structure with the projected price open. Again, noticing on this minute or this shorter term chart, where the highest sensitivity levels are. 5450, 5400, and 5500 would be the key areas we'd be watching for the open. This is all expiries turned on, so this is weekly and monthly expiries. Noted the expected move is significantly high with projected implied open down below. So the takeaway from this GEX ratio, we've been discussing this. Even with the price appreciation, we did not see an increase in GEX ratio. This GEX ratio is basically a put call ratio, but we add a time component, which is gamma to it. So it allows us to view short dated call versus put gamma. And again, we did not see a significant recovery in this red dotted line, which would indicate that short dated call gamma was going into the complex versus put gamma. So again, in simplicity form, that's just an overall bearish state, even though we did see price appreciate. So maintaining this put dominated, not recovery with the GEX ratio continued us to be cautious heading into the 2 days of price appreciation that we saw, and the complex still remains put dominated with put speculators speculating to the downside. So key levels above, obviously 5,500, we'll watch that at the open. The projected opens 5,475, and then we have 5,400 down below us. That'll be a key area that we watch for some sort of price reaction heading into today. Heading on to the SPXP, which is 0 DTE, it was call dominated at the time that we ran this, but our implied open obviously is significantly below all the option structure. Forcing spot price here lets us really get a good view of what the option structure will be heading into the open if we maintain the implied open at 54.75. Your main takeaway should be we are put dominated in the left-hand plane, which is below spot price, and the right-hand plane above spot price, noting these highest sensitivity levels of delta, gamma, and charm heading into the morning. 5,600 to the upside, these in-the-money puts, significant size with the integral as compared to the out-of-the-money puts at 54.70. So again, 54.70 would be that first area we'd look for some sort of reaction at the open, and then looking up and down the left-hand plane strike, charm at 54.40, gamma at 54.70, and then obviously Van really not mattering at the moment. So forcing spot price on our EM command here, again, you can see the highest sensitivity areas. Make sure you're documenting those on the chart heading into the open. Again, 54.70, 5,500, and then we see 54.50 and down through the options complex here. So we'll continue to watch that at the open as we head into the opening print here. Looking at the SPX spread X this morning, we've overlaid our trading view full complex, again, noting 5,500 was negative GEX at the time of running this morning. So again, that would be our first level we would need to cross. Again, you're still going to be in a completely put dominated environment as you're below negative trans at 55.75. So again, put dominated, put gamma, and put speculators, again, speculating to the downside. So we have a significant headwind that we would need to cross for any sort of price appreciation to even clear back above in trans. And then once you're back in transition, obviously it would be significantly choppy. And then we see 5,600 up here, which we've already discussed, a large amount of negative net delta within the money puts. So at the open, basically, our thesis for me would be just wait, let the dust settle, let the book clear. There's probably going to be extremely emotional trading as traders are opening their brokerage accounts from yesterday into this morning, seeing significant losses depending on when they entered, or significant drawdowns within their overall accounts. So there could be some just forced selling this morning just due to emotional trading. I would be watching at the moment this low at 54.50. We've discussed 54.45 and then 5400. Again, I'm not looking to trade anything at the open or really until we get our first set of data on the vol-m command. Obviously, the vol-m command is our intraday volume analysis, letting us know where market participants are speculating. So I will be a wait and see approach, probably at least into the 10:30 hour, 11 o'clock, and then I may be total hands-off trading as the option structure is extremely broken and we're opening below all of the significant levels. So reference points below us again are 54.50 and 5400 at the open. So hopefully that helps everybody. Again, extreme risks this morning if you're trying to trade directionally. New traders, I would say just study, watch the overall structure and how we react, and wait till we get some more data with our intraday tools to be able to find an edge if there is one available today. So we'll be in Discord in a few minutes. Thanks everybody, and let's make it a great day.